Hello, everyone. My name's Andy. I'm from the Finding Value Finance channel. We've got Scott back with us today. I know everyone is getting scared. They're getting scared in uranium, scared in oil. I'm seeing the deflationary, disinflationary guys coming out of the woodworks. I even see some people on Twitter. I think that big guy, whatever his name is, I can't even remember it. He's talking about the super cycle of commodities is done. It's not going to go through all these 2021 super cycle guys. And then he was talking about something on the lines of like, if you can't call something in the next 12 months or something like that, I'm like, man, this guy, he doesn't know perhaps investing as well as I thought he did. Things don't happen in 1 year increments. That really actually tells how much he knows about the market, at least in my opinion. So, Scott, I brought you on, and we've got a lot of negative sentiment going on in the markets. A lot. I've got people messaging me. The occasional people that message you and myself about deflation or disinflation or all of these things. Is there any truth to it, in your opinion? Do you think there's any truth, and why? And do you think that the uranium market's just going to, I don't know, fall out of the sky and head lower and not come back? Or, what's your opinions on that?
So nothing has changed from my perspective. You've got to take a longer picture, longer view, longer time horizon view. So if I look at the charts, the thing is, like, because we talk about the weekly charts so much, and when we are bullish on weekly charts, people seem to expect it to happen immediately. But if you're looking at weekly charts, let me just show you, right? Because if we're looking at weekly charts, and this is a weekly chart of oil, right? So we're in a massive, massive bull market, if you think about it. If you look at this chart, so we're in a run that's similar to this. We're having a pullback. We're probably likely to come down. We've come down now to 200 weekly moving average on oil. And obviously oil is the king of all the commodities. And so
I've got a question, Scott. Sorry to bother you, because you showed that.
Yes.
That lead-in pattern that you pointed to in 1999 to 2002, do you think that could be the same lead-in pattern from 2016 to 2020? And that the first wave of the third leg is what we're putting in, which is analogous to 2002 to 2003.
Yes, we could be. But the simple way that I see this chart, Andy, hold on, let me just, pass. Right, the simple way that I see it, we normally in a commodities bull market, we see three big legs. So that was 1, 2, and 3, right? For me, in my opinion, we've just had the first leg up, 1, and so it coincides with this period here. And then we might have a pullback. That might look something like this, like we've seen in a lot of the uranium charts right now. So we've got the 200 weekly moving average that's coming in for a lot of the uranium charts. And this is a zone of significant support all the way here. If I just delete everything off the screen. For me, this is a huge support zone all the way, and it's a broad zone. So it doesn't necessarily mean it has to bounce right here and right now. But this broad zone here is a huge zone of support, like even coming all the way down here. Like you've had multiple levels of support and resistance all along this level, which means it's a pretty good support level, along with the 200 weekly moving average. Now, once again, going back to 2002, it could pierce below. And we've seen that in silver chart just recently, gold chart. And we did, in one of the earlier videos, we did call for I think, slingshot pattern in the making, right? So we've seen a slight pierce below, and this is where everyone freaks out. And this is where uranium is potentially sitting right now as well, around here. And we could see a pierce below in uranium. But for me, I'm going to be buying. It's not financial advice. I'm not necessarily right. Obviously, I don't get a lot of my calls right. But in the long run, I believe in the thesis. And that's why, for me, this was a buy zone. This is when I actively went and bought a bunch of gold and silver mining stocks here, right? Because I know it's probability bet, and we might be wrong, right? So we might come back and pierce below again. Who knows, right? But what I'm trying to say is, when the fundamentals are there, when the market conditions are there for a bull thesis, I look for buying opportunities. I don't care. I don't care if it goes down temporarily. You know what? I welcome downturns. And hold on, let me just show you uranium charts. And I welcome downturns because first of all, it's a buying opportunity. But second of all, more importantly, perhaps, I can actually focus on things that I like doing in my life rather than spending a lot of time being excited about the markets and looking at the markets all day. I can go and spend some time with my kids and spend some time with my wife. I can spend some time reading the Bible and drawing closer to God. So I can do a lot more things that are more exciting in my life if the markets are going through these consolidation and volatile periods. So you can see in the URA chart, for example, we are just grinding above it. I mean, this is a classic pattern that we see everywhere, right? So first leg up, now we're grinding just above the 200 weekly moving average. Who knows when it's going to break out? But every time, as I keep saying on your show, as I keep saying on my show as well, every time it comes down to the 200 weekly moving average, it's an accumulation zone for me. So I'll probably buy some more either today or tomorrow as well, some more uranium stocks. So for me, nothing has changed, and the fundamentals that haven't changed. Obviously, you've still got the SPR. They've got to fill it up, which means it's more bullish going down the road, right? So obviously we're drawing down on the existing inventories for oil. We've got market conditions. So if you look at the delinquency rates and the deflationary camp, what I don't understand is what is the argument for a deflationary pressure, right? For me, the deflationary pressure comes when the loans, when we see a significant portion of the loans, which is the money itself, going to delinquency rates. So this is credit card loans. Sorry, let me just pull up. So we see the consumer credit card loans pick up a little bit, but you see the level, you compare the levels to 2006 and 2007 before the financial crisis, it's nowhere near it. But this is probably the more important because this is indication of overall money that's been created in the system through loans. This is delinquency rate on all loans, all commercial banks. And so what you see here is it hasn't picked up. And even if it does pick up, it gives you a year's worth of warning before the deflationary pressure hits the markets. So this is what I'm looking at. I'm looking at all the money sitting on the sidelines. I don't know if you checked out the household checkable deposits recently, but it's skyrocketed even higher. So people have more money than ever.
That's funny. It's like going in the opposite direction than what everyone else thinks.
Yes, yes. So households and non-profit organizations, checkable deposits and currency. Okay, so last time we talked about it, I think the last time we mentioned this data set, it was sitting around 4.4, 4.6, somewhere there. But now it's sitting at $4.9 trillion in household and non-profit organizations, checkable deposits and currency asset level. So this continues to go up. And what you see in all hyperinflationary periods, if you look at the Weimar Republic, for example, if you look at the 1970s in the US, the inflation picks up. And then there's a period when there's a brief relief period where people, think the inflation's died down. And I believe that's kind of where we are placed right now. It almost feels like people just think, yeah, everything's going to be okay. There's no trouble. And the primary reason for that, in my opinion, is because of the Strategic Petroleum Reserve, the release of it.
Yes. And I wanted to talk about that. Yes.
That is the driver. That is the driver for your input cost, your manufacturing cost, your everything, right? So if you think about airplanes, for example, well, that's an input cost. And how does that impact? Well, if you have a global organization that is service-based company and you're incurring a significant cost, traveling your employees around through air costs, for example, it puts upward pressure on your services that you deliver. It puts, if you're an insurance company and you need to do car repairs, for example, it puts upward pressure for anyone who's fixing up the cars or fixing up the homes or fixing up whatever. So, and it's an input cost to absolutely everything, the diesels, manufacturing processes, lumber, iron ore, like it's an input cost to absolutely everything. So the fact that we've temporarily put a hold to the upward trajectory in oil prices because of an artificial manipulation through SPR release means it has temporarily put a hold on the inflationary pressure. And so people are feeling complacent. People are, becoming confident that the inflation story is over, but I don't believe it until I see it through the data, through delinquency rates, for example, which would in turn indicate a significant, withdrawal of money from the system. I wouldn't believe it. And until I see something significant happen, nothing's changed. Nothing's changed. There's still energy crisis. We're still drawing down on inventory on all the energy products like natural gas and oil. Nothing's changed. And we're seeing gold and silver prices move up, and usually they move ahead in preparation for. So if you think about the gold movement, right? So before we even saw the inflationary figures in 2020, 2021, we saw gold move quite early, and usually they lead the movement. So if I look at the gold chart right now,
You're on top of it today, Scott. You're just killing it.
I'm just happy, you know.
Good.
I don't know. I think I've just spent so much more useful time, like just not being so concentrated on the markets. I'm just focusing on so many things that are more useful in life. Like, as I said, just drawing closer to God, spending more time with the kids, reading a lot of books. So it's been very productive couple of weeks for me. So working a lot harder at my work. Anyway, so this is gold. If you look at this, so from 2018, well, that was basic. Okay, I'll just overlay this with US IRYY. So United States inflation rates year on year. So if I just show you this, what I'm trying to say is gold led the movement. Where's the error? Here you go.
I like where you're going here, Scott.
Led the movement. Yes. And then the so gold moved before the inflation rate moved. And what I think might be happening, this could be, we need to wait and see. I'm not calling a bottom here, although I think it might be quite likely that it is a bottom here, because as I said, I think this looks like a false breakdown for me. And you can see that in the silver chart as well. But what I think this gold and silver markets are indicating is that there is more inflation to come down the line. I think that's what it's trying to tell the markets. And yes, I mean, obviously you're going to have a lot of people who are impatient. I was actually, this is a comment that I need to make. I was reading a book, I forget which book. I've read like maybe 15 books in the last 3-4 weeks or something. Anyway, I've just been going through so many books. But one of the things that it was interesting was people that are impatient are usually negative people and have negative outlook on life. And I thought that was really interesting because I consider myself pretty patient. I'm positive. And so if you flip that around, yes, I mean, obviously, if you're impatient and if you're frustrated at the markets that you don't have control over, the only thing you can do is identify your strategy and identify the buy zones and just execute your strategy. That's the only thing you can do in the markets. So obviously, if you don't have the control over the markets and you're getting frustrated as to how slow the markets are moving in your favor, obviously you're going to be unhappy and negative. And negative feelings causes chain reactions. So if you start thinking negatively, then you think about something more negative. And I've actually, Andy, I'm going to promote my new channel because I'm like deeper than the markets. I think, I mean, okay, so I've started a new channel, guys, and I just wanted to highlight. I mean, going through Twitter and stuff like that, investment is great. Sharing my experience in investing is great, but I think what's more important that I've recognized due to so many frustrated and negative comments on Twitter, for example, I really do want to share how we can all be happy regardless of the circumstances that we're in, right? And one of the examples that I can kind of give you is during Hitler's days, you know, the Jews. So there was a systematic murdering or the killing of 6 million Jews during the Hitler World War II movement, the Nazi movement. And even despite the difficult circumstances, apparently there were Jews that were willing to share the last piece of bread they had. And they didn't know they were going to get killed, right? They didn't know they were going to get killed in these concentration camps. And they didn't know if they were going to starve the next day. But there were people who were compassionate, who were filled with love, that were willing to share the last piece of bread. Now, if you think about that circumstance, how can we possibly be complaining about the markets going down? If you start with gratitude and if you start with, you know, just looking at how many things that you have, we don't even think about the eyes because we can see so clearly. But for some people, you know, it is everything they think about. I mean, we are blessed with so many things in life. So I think just focus on the positives, and hopefully my new channel, I'm going to be going through a bunch of books that I've read. I'm going to be going through, you know, all the things that will help you to be positive, because I think life is just so important. And if you really concentrate on the markets and focus on the negatives, that's what you're going to get. And for me, here's the thing for me. The investments with uranium, whatever it might be, it might not work out. There's a possibility that I've got this trade completely wrong. I think I'm right? I think I've got my conviction levels are higher than ever, but I might be wrong. There's a possibility. I need to be open to that. But let's focus on the positives first. Biggest positive for me is that I actually met you, Andy. Without me posting stuff around uranium and the markets, I would never have come across you.
Right.
So for me,
well, I reached out on Twitter.
Yes, this relationship. So Andy just reached out to me randomly on Twitter, right? I don't know how it happened. I only had like 500 followers at the time, and he just randomly reached out, and I went on his YouTube, and we formed this relationship where, at one stage, I'm so busy at work, so we can't do this every day now. But at one stage, we're talking almost every day, and we formed friendship. Like, I mean, for me, even if I lost all my money through uranium investing, whatever it might be, this relationship alone is worth way more than what I would lose if I lost my entire uranium portfolio. There are other things in life. For me, failure is something that I'm not afraid of. And I think, Andy, it's probably the same with you. Like, our biggest regret would be if I knew that something, an opportunity like this came along, and great risk to reward ratio setup came along, and let's say we didn't give it a go. Like, I mean, we could be looking back when we're 50 years old, and look back and go, oh damn, I should have tried this. But you know what? I'm not afraid of failure, because every time a situation became worse for me. So I'll give you a little story, right? I know we're going off the the markets and stuff right now, but I'll just give you a little story. So when I was in high school, so my dad used to run a pretty well operating construction company. He used to build houses, build homes, build units, build apartments, and sell them off. And at one stage, he was doing really well. So when I was a kid, he was doing really well, and I didn't really bother studying. Like, I didn't really bother doing anything, because I always thought in the back of my mind I could rely on my dad. He will provide. Even when I'm an adult, maybe I don't have to think about working, right? But there was a time during the Asian economic crisis, and I think when I was in high school, where his company pretty much went bankrupt. So it was so close to bankruptcy that wasn't even funny. And I saw it. So I went back to Korea to visit my dad. And I don't know if you watch Korean dramas, but if you watch Korean dramas, when people are about to go bankrupt, they stick red stickers on the furnitures, right? And I went to Korea to find that dad had all his furnitures. I mean, actually, I saw these people dressed in like black suit come into our house and start sticking these red notes on the furnitures. And we were about to lose everything. And you know what? That was the moment when I realized I need to study. I need to like really wake up and do something about my life. And that was a positive. At the time, it felt like the worst thing that could happen to my family, but it ended up being positive. And there were times where my company went through restructure and I became redundant. And you know what? I was like, I trust in God. And this is after I became a Christian. So I was like, I'm going to trust in God. I'm going to welcome this opportunity. I'm just going to go for it. And then I eventually went on to a higher paying job. Like, I mean, everything works out. And so if my uranium thesis doesn't work out, let's say, I'll just give you an example of what I can do, right? So let's say I lose absolutely everything that I have. And I don't think I will, but let's just say I do. You know what? That will be a motivation for me to start something new. So right now I'm an employee, right? But who knows? If I was to totally go bankrupt and had to start from the scratch zero, maybe I'll be an entrepreneur. Maybe I'll start building a business because I need to make up for it somehow, right? And it could turn out to be a positive. Who knows? I might make more money, starting a business than doing, making money out of uranium investment. Like, no one knows that. But what I think is really important is the mindset. Like, do you want to worry for the rest of your life and look back to your life on your deathbed and just be like, oh my goodness, I spent all my time worrying about uranium investment, worrying about oil investment, you're worrying about gas investment? Or would you choose to think positively and be like, actually, you know what? Even if it does fail, I'm going to smash through life because I know God is there to help me and I know I can achieve something great. And if you read so many stories of people out there, like Thomas Edison or whoever it might be, Einstein or whoever, they've had so many failures along the way. Like Lincoln, apparently, Like he was failure all the time, right? So he had like 2 businesses set up. He failed in 2 businesses. He failed in, he lost in all the political polls until he was in his 50s, for example. So if you look at anyone and everyone, I don't think the differentiator between a successful person and someone who's just mediocre is people welcome failures. They see failure as an opportunity to improve, and they see failures as a stepping stone to the next level. And classic modern example is Ray Dalio, right? He's built up all his empire. He got his bet absolutely wrong when he was in his early 30s, right? So he got the market wrong from 1980. He thought the market would crash, but that was the start of a massive secular bull market in the market. So he was shorting the markets. He lost absolutely everything. He had to go to the in-laws to borrow a couple of $1,000s. But if he had given up then, right? If it didn't happen to him, maybe he would have lost everything in his later ages because he didn't learn the lesson. But because he learned and because he decided that he was going to just use that as a stepping stone, now he's a billionaire. I mean, positive outlook in life, I think, is everything. And I think really, I just want to share that with the people because I think it's more important than whether we get this uranium call right or the oil price calls right. Just having that positive mindset and just trusting that God will help you through every single step so that you can achieve something great. I think it is far more important. Anyway, I think.
I like it, Scott. I like it. I like that you're charged up. Sounds good. No, speaking of oil, I really like oil. I really do. I like uranium too. Don't get me wrong.
Yes.
I know a lot of people are pretty negative on oil, and when I don't know if I've got a little bit of an outlook like you. I'm just a positive outlook, but when I look at things and I look at it from a logical perspective, I have no emotions tied to this. All right. And if I were to just reframe I'll say it to everyone out here, maybe Scott can give his opinion after or whatever, but I'll just kind of say what I have on the top of my mind. So, the conditions that we have today are perfect for these things to take off. They're perfect. And I know some people are getting worried because the inflation number went down a little bit. We went from a 9% down to 7 point something percent, whatever it is, on the consumer price index number. But I'll just say this. They released, so we went into this ramp up of oil, and we were eating through inventories, and it was ramping like heck. We got to like 120, 130. It was ramping. And what happened? They flooded the market worldwide with strategic petroleum reserve oil worldwide. We have drawn down hundreds of millions of barrels worldwide of inventories to bring the price from 120, 130 down to where we are today. We've got the Freeport LNG terminal. That's offline. That's 20% of American LNG capacity off. So we've got China in lockdown. So China's in lockdown. We flooded the world with hundreds of millions of barrels since June in the past 6 months. And we've taken all of the know-how of getting oil out of the ground out of Russia that was Western based. So tell me this, does that seem bullish or does that seem bearish? So when someone says, and somebody said this, he wrote, he said, well, the Federal Reserve, or I mean the government is going to fill up their strategic petroleum reserves when it hits below $70 a barrel or 70 something dollars a barrel. And I'm like, how is that going to happen? Tell me how that's going to happen. And then he's like, well, no, it says it right here. It doesn't matter what they say. They can say whatever they want. And my response was, what are we going to go through? The largest depression we've ever seen. And he's like, I don't understand. Let me just rephrase this. All right. This is what I'll say. We released hundreds of millions of barrels in 6 months from reserves. We've had China on lockdown, and we've yanked out of Russia. Now, if we are pumping the system with reserves, tell me how it's going to work when China reopens, Russia stops putting these barrels, their production goes down, and now we're instead of putting barrels into the market, we're taking barrels out of the market. The swing there is like 6 million barrels, 7 million barrels. That's 6 or 7% of the entire production of oil worldwide. Do you understand what that's going to do to the price? And I don't know if people grasp that. It's like, this is a setup I've never seen in my life. Now, I know that the timing is where everybody wants to get this. They just want to nail it. And it's like, guys, the timing isn't as important as just catching this move. Like, I haven't seen the fundamentals in oil or any commodity this good. And so I'll say, I think it's coming very soon, like within, maybe measured in weeks, I don't know, or months, but I don't know how they're going to make this up. That's where my mind's at. I don't know how. Now, people are going to say, why is the price down in the short term? I'm going to tell you this. I don't know why. It doesn't matter why. And even if I made up a thing and told you why, it shouldn't matter. Now, we could pull back to $60 a barrel. That is a possibility. Draw a line going across from the top, from the peak of 2008, all the way on the tops of all those different ones. From 2008, if you just draw a peak, we could go back and do a full retest if we want to. That is a possibility. We've done a 50% retracement from the high of oil down. It very well could do a 61.8 fib retracement from its bottom. But I'll just say this. When things come down, you know how you make money? You buy it when it's down. You have to be positive when everyone else is negative. That's the hardest thing to do as an investor. And before this, I was talking to Scott here, and I was like, man, maybe I should like go on margin at this bottom here. And I never go on margin. Like, I'm getting massively bullish. I don't know what other tricks they have up their sleeve. Maybe they come out and do some more reserve releases. But I'm going to be holding strong, and I'm waiting to see where this thing bottoms. And we could have bottomed, and we could bottom any second. Who knows? Because these things reverse quite quickly. They get everybody on the short side, and then they squeeze them in there, and they have to cover and get out. But I like your comparison to gold, Scott. That was a very good thing. Gold is a leading indicator. Gold's coming on up, and that could be signaling that we could have either easier monetary policy and or more liquidity added to the system somehow. I don't know what it's from. It's just telling us a signal about that. And another thing that I'm not seeing a lack of, I don't see copper falling. It's not falling right now. It's going up. So copper's usually, Dr. Copper, that's a signal that we're not going into some recession yet, at least. It's going up. And we've broken out of these big patterns for copper. So I find it very hard to believe that we're just going to fall off a cliff here in the deflationary camp. I think it looks good. And it's copper's matching gold, which is matching silver, which is matching some other ones. Now, there's some agriculture stuff that looks like it might be coming down. But I also think that's from the hundreds of millions of barrels released from the Strategic Petroleum Reserve since summer of 2022. What are you seeing, Scott? And yes, I think that's where we're at.
I'm seeing this false breakdown. False breakdown.
You know what this is called?
So once again,
this is called the bear trap. This is what the bear. Remember, I was talking about that we haven't gone through the bear trap yet. Like videos and videos ago, everyone's like, we're in 2004. A lot of people were talking about 2004. I'm like, guys, we haven't gone through the bear trap yet. This is the bear trap. We are in the bear trap right now. This is what it feels like. Now, the question is, the most amount of money is made when you buy the bottom of the bear trap and it squeezes into the third leg. That's where it is. What do you think, Scott? Sorry for cutting you off a little bit.
No, that's okay. So basically, if we were to repeat the bear trap of 2001,
2, Yep.
So basically you come down piece below, a little bit below the 200 weekly moving average, and then that's when the second leg starts. So you can maybe expect, if we were to repeat, then we can probably come down while the 200 weekly moving average is going like this, come down like this, go up, and then grind around here and then take off. So that, I mean, so this is where we need to put timing into perspective, because when we are bullish all these commodities, we're not talking about tomorrow. And so because we're making references to weekly charts, I'll just tell you if it was to play out like this, when this is, because this could be June, middle of 2024 that we're talking about for this entire pattern to play out. So we need to be ultra patient with this pattern, because we are talking about weekly charts here. I don't think it's going to take that long.
I think it's going to be sooner than that.
Yes,
that's
I think it's going to be sooner than that. I think it's going to be sooner than that, but we just need to be open to the possibility that it won't happen for a while, and just come up with a strategy that you can easily adapt and execute. That's what I try and do anyway.
Now, here's the thing that I want to happen. I want this thing to come back. I want it to go slow and turn and give me another like 4 months or 6 months of buying. I really want that to happen, because then I can keep buying and buying and buying and buying. And then when this thing goes, it's retirement. Well, not totally, but it's, you know, I can lose some stuff out of the life that I don't want anymore. That'd be fun. And hopefully it stays down a little bit longer. I don't want it to go just berserk. And I think the possibility is it could go berserk. I think the Federal Reserve knows this. I think they're scared. They're trying to get rates up as fast as they can. They're trying to stop the housing market. They're trying to stop everything from happening. And what happens is this money in the system, you know, that people are trading and whatnot, they are viewing this like they have everything under control. They're viewing this like the inflation is going down. But all they did was release hundreds of millions of barrels out of strategic petroleum reserves to hold the inflation down, at least a portion of the CPI. Now, when that comes raging back, I don't know what's going to happen. They're going to try to hold the housing market down. That's a portion of the CPI as well. But all the other components will go up. And I don't know if they're going to be able to control it. The deficits here are big. Now, I don't know if China's doing lockdowns to fill up their strategic petroleum reserves. We just transfer ours over to theirs or something. I don't know what's going on with that, but they could be doing this from a strategic standpoint. There's things way deeper than what I think everyone understands. It's not just as, you know, oh, it's down, oh, it's this, and we have this stable economy that, no, guys, they're like fighting for position in the world order right now. And I don't think people understand that. This is like all out war. And they're not doing it by shooting guns. They're doing it by like financial strategic placements and like increasing the dollar and increasing interest rates and doing all these different things that are basically currency wars. And it's happening all right now. So oil is going to get, I don't know, in the next 6 months, oil is going to get revalued, I think. And it's not going to be, I mean, yeah, we could see some further downside. That is very a likely possibility, where we could go somewhere like $60 or something. But
and if you wanna know what Andy's talking about in terms of all the strategy and like the world, all that changing world order, I would highly recommend this book. This is a pretty good book, actually. Principles for Dealing with the Changing World Order: Why Nations Succeed or Fail by Ray Dalio. So I would highly recommend this book.
But what they're trying to do is Russia's linking with China and India, and they're trying to create trade partners because that's half the world's population. Russia's very commodity rich. China's very industrial based and commodity rich, and India's got a bunch of people as well. So, I mean, they can all pair up and then be like, you know, screw everyone else. And if you've got the manufacturing base and you've got the commodities, that's all the wealth. Everything else, all this financial crap, is not wealth. Bitcoin is not wealth. Bitcoin's this fictitious thing that they created and is a big Ponzi scheme. That's my opinion. But you've got all this other stuff that's a Ponzi scheme too, which is like, you know, paper currencies and all that stuff. Everyone's going to want to trade their paper currencies for real things at some point. When that point is, it'll be soon. And there's going to be a lot of stuff that they can't trade their currencies for. And when things get transacted outside of the dollar, good luck. The dollar's gonna eat it. But that could take 5 years, 10 years. I'm not playing a game where it's a week or day or whatever. Like guys, that's not where the big money's made. I'm positioning for what potentially could happen. And if it doesn't happen, I'll be fine. I still have other investments. I still have things that will work. I'm not all in on one thing. So what do you got, Scott? What other opinions?
So I'm just looking at oil chart right now. It looks crazy.
Well, we've got some recent selling pressure. It did end quite low this past day. This is 12/6 that we're recording this. But overall, I think we've got the first wave that's complete. We're pulling back to do wave 2. So wave 2 is a pullback. It's a consolidation pullback. I do think there could be further consolidation in oil before it goes up again. They usually consolidate for a little bit, and then we go. It might be a couple months or something on the lines of that. And right now, we really have had, we've had a 50% retracement, roughly speaking.
Yes. But I'm just noticing the similarity between this pattern here to this pattern here. Because you've got almost that thing here where we're hitting the wall here, right? So if you look at this chart, we've hit the wall. This was the first leg up in the 2000s bull run, and so we've had 3 strong. This is 6 monthly chart. So we've had 3 strong 6 monthly charts. So we've had almost 3.5, right? Strong 1, 2, 3 strong 6 monthly charts, and then it came down a little bit. But the interesting thing here I'm noticing is that we've hit the wall pretty much on this line here where it was the previous high. And so if you look at this line, other than the little peak here, we've hit the line just here. And what we're doing is probably just forming that little handle here. So once we blast through this, it's all like free space. Like there's nothing stopping it from going way higher. And really, this is the type of run that we can expect after it breaks out. But there could be a time where we do consolidate for a little while still. Because, temporarily, who knows, right? Because they might try and release a bit more strategic reserve. They might try and play funny with the markets and things like that. So we don't know the short-term future. But what this is telling us is that we're in a massive secular bull trend.
We went from $33 to $150, right? In the last bull market. Yes. And that was a 5x or so. So I would assume if we hit it at about 100, we'd probably go to 500. Would be a 5x above on top of that. That's kind of my guess.
So this potentially could be what it looks like, kind of.
And it should end up around 500.
Second hump here, you've got the little thing here. You've run into resistance here. You've come down, and so once again, this could tell you the time frame. And here's your $500 oil target, Andy.
Yep, I know. So I've studied. This isn't like my first rodeo here. I've done fractal analysis. I've done ratio analysis. I've done all sorts of analysis. And what happens is people get scared out of this stuff on the bear trap. And what creates that big, powerful move upward is everyone gets scared. They all go short. Right now, we have very low number of longs in the futures market. Not many people are going long. So I think we're getting close to the sentiment. Now, here's the thing. I don't know where this bear trap bottoms. No one does. So does it bottom at $74? Does it bottom at $64? Does it bottom somewhere in there? I don't know. No one does. Yes. But I think these guys that are bearish, they're gonna get awakened very quick when this thing reverses. And it could be a very strong reversal. I don't know if it will be, but I mean, I'm kind of thinking it's gonna rip. But I'm in it. I'm in it. I'm in it to win it. I'm not going to be selling. I'm going to be buying on this pullback. That's what I'm doing. Now, I can't give advice. It's not supposed to be used as advice. You guys can do whatever you want. But what he's showing there is my opinion of what it could potentially do. And we are in. So when uranium takes off and when oil takes off and all these commodities take off, I've never seen them take off in a disinflationary environment. They've always come during these inflationary periods. Now, what they have done, the governments all around the world, is they have basically lit a fuse to a bomb to go higher for oil. And I don't know if uranium's going to take off with it. It very well could. It has in previous cycles. It probably will in this cycle. So what they did is they push down, push down, push down, push down. When they lose control of this, it is, I don't know what's going to, I mean, I think it's just going to, it's going to super spike. Because they've been messing with the markets. There's been no, I mean, you're going to go from okay supply demand to a massive deficit in like this. They'll probably release more strategic reserves. They'll probably do whatever they can in the short term, but all they're doing is delaying the signals for oil producers to come online. It's like they're purposefully going to push this thing to the moon. I've never seen a setup like this, never before. Now, I know I'm coming on here, I'm being very bullish during a negative sentiment time, but that is when, remember what I always say, Scott. What do I always say? Let's see if you can remember. What happens when price goes down and everybody starts panicking? What do?
You panic buy.
You panic buy. I panic buy. That's what I do. And I get really aggressive when everyone gets real fearful. So we're getting closer. And I'm gonna wait for strength. We're gonna come back. I'm gonna wait for it to strength, and I'm gonna be like boom, 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 boom. That's just what I do. And then hopefully it goes a lot higher. But nothing's 100%. I don't know this for 100%, but I can tell you, right market conditions, good tailwinds, the fundamentals look good, the inventories look like crap. They just keep going down and down and down, and this is for everything. You know, you could say the same thing for copper. Now, if we're so weak, if we have this deflation, disinflation that everyone's thinking about, why is copper up? Why do we break the downtrend in copper, and why are we going up in copper? How come there's no delinquencies showing up? How come some of these other metals, gold and silver, are going higher? Wouldn't they be going lower? Why are people positioning in another different way than everyone else is? And remember, oil is a laggard, so is uranium. It lags the price of gold. It lags those things. And maybe, do you have a chart where you've got like gold overlaid with on top of oil? Because they are, I think, delayed a teeny bit.
Yes,
and that's what
definitely.
That's what I used when I went into oil. I first went into gold, then I went into oil. That was back in 2020. And it was part luck. It wasn't like I was trying to do that on purpose.
So that's gold. And
so gold had that lead-in pattern, and it was slightly before. It looked pretty close to being equal, but
it kicked off here. Gold kicked off way earlier. Yeah.
Yep. It's slightly before. The whole gold thing is shifted to the left and oil's to the right. So when we saw that move in gold from that peak there in 2021 or 2, when it started coming back down, it definitely hit oil there. Yep. But I've taken it where I've like done the bars pattern and then like put it on oil and then shifted it like by 6 months or something, and it overlaid pretty well in some of the stuff I looked at.
Yes.
Yep.
There you go. Yeah. Gold told you the massive bear market coming well before as well, actually. So gold started going down, and then oil tried to hold up, and then it failed, came down.
Yep.
Yes. Yes, yes, yes.
Yeah, I think we're getting close. I think gold and silver look really good. I think they look really, really good. And Yeah, you got to be strong when everyone else is fearful. That's just the way it is. And I know,
Yes.
and even though your Twitter messages just start getting filled with negative sentiment, the deflation boys are coming out of the woodworks. You got to be patient, wait for this thing to bottom first, and then when you see signs of strength, I'm firing off. That's what I'm going to do.
Yes. Yes.
So,
Yep. Yep.
you have
Yep.
anything
And
anything else, Scott, or what?
yeah, we just have to be patient, I think. I mean, these are all weekly charts, and a lot of the charts that we go through are on weekly time frames, right? So I'll just show you one chart that I have been patient with, and this is probably one of my other largest holdings outside the uranium sector. So for Fortescue Metals, it's done extremely well during even this cycle. But like, I mean, this is when this was breaking through, inevitably most people go through doubts. Like, I mean, it's like, okay, well, it's broken down the 200 weekly moving average. Is it going to die now? But no, like, I mean, this is why I think if you look at the charts these days, most of them will do a fake out on you. Most of them will pierce slightly below the 200 weekly moving average or the daily average or whichever trend line you draw. So you need to be prepared for that. And you do a slingshot move up. So
that pattern is the same pattern as crude oil. Crude oil is the pullback there. If you were to copy that pattern from the top, how it did that double top, it went down. I mean, it's not exactly the same because that one there's a little bit bigger on its second bounce, but it's very similar to crude. If you were to go into the daily, if you zoom in on it quite a bit, like zoom in,
gotcha.
And
like
squeeze it up. Yep, zoom in and squeeze it up, and it's basically because I do a lot of pattern recognition. Yep. I think you're seeing it. If everyone sees it, you're gonna have to squeeze it up a lot. But and these things, it's the same pattern. Yep. But if you look at how that bounces at the bottom too, it's got the same type of bounce, and then the pull down, and hopefully we get buying pressure. It could pull back even further and be a huge slingshot to the upside, because if it pulls back down more people are going to get bearish, more people are going to go to and short it, and they're just going to, I think they're going to get squeezed like supernova squeeze.
I mean, 200 weekly moving average for me is like the only thing that we need.
We might go back a little. What's a little bit below the 200 day right now? That's at like 60, 68 maybe, or 60 something.
Yep. So
66.
this level, this is probably a pretty good support level here.
Yep. That's probably, it could hit there.
Bounces.
Or it could even,
and that will
it could even put a little wick and hit it.
Yes. And that's where you get the false breakdown, right? So just like this chart, FMG. And you see this everywhere. I mean, you absolutely do. So this is the false breakdown, right?
What's the can you put a
this is similar, this is very similar to the URA chart as well, if you look at it right now. And it's just a grind around the 200 weekly moving average. And I could almost maybe see us doing, I've talked about it on my channel as well, but you could put in like a little wick below and then come back above. That's a possibility. So you just need to be open to all the different outcomes, because we're not in control, but we just need to be open to it. We need to be able to expect it so that we're not disappointed with any movement in the markets.
Yeah, and we're not, would you consider yourself a perma bull?
No, not at all.
I know, I'm not either. But
There's
people are
no
like,
way that
perma
will
bull.
be
I'm a bull during a bull market.
Bull commodities. Yes, but a bull during a bull market. Yes.
I entered.
But in terms of commodities, I very well understand that it's going to be a very cyclical trade. So as soon as we have a couple of big legs up, I'm going to get out. and the 3 legs is what I'm looking for in as I said here, used oil last cycle. If you look at it, we had the 3 big leg ups, 1, 2, 3, right? If you look at CCJ chart last cycle, it had 3 leg ups. It's kind of hard to tell, but this is 1, 2, 3, right? 3 big leg ups. And then if you look at chart of silver, am I going too fast?
Because it like lags behind.
Okay, got you. So 3.
Yeah, maybe just draw on it.
Yes. So
I mean, I know
really,
what
this
they
is
are.
where it started. 1, 2, 3. That's when I'm getting out after 3 leg ups. And then if you look at gold, even gold, I think had 3 leg ups. So for me, like, I mean, it's just riding through it. I mean, there's nothing more you can do. So I mean, this is probably one massive leg up here. This entire thing here. 1, 2, and 3. So usually you will see.
Yeah.
Yeah. I mean, that's kind of where the big lines are.
Yeah, usually
Trends
the
are.
third leg's the longest leg. So I don't know how. See, what potentially could be happening is like these legs are bigger than what we even think. Like one could argue that 1970s was a leg, and then this 2000s is a leg, and then we're having a leg come up soon.
1, 2,
Yeah.
3.
Because it happens on all these different time frames. It's ridiculous. I know.
Yes. But yeah, I mean, we're just at the beginning. That's the thing. So no, I'm not a permable. But I mean, literally across all commodities, we've just had our first leg up. So there's at least 2 more coming, in my opinion. Unless, I mean, we're completely wrong about this.
So how could we be completely wrong?
I don't see how, but you know, who knows, right? Because there are so many factors out there, maybe that I'm not across. So I have to be open to the possibility of me being wrong, but I don't think I am, but I might be.
Well, I mean, could we be wrong on oil? And how?
I just don't see how we could be wrong. I mean, inventory is drawing down, SPR release. Like, I'm just like, how? Like, unless like there's a huge resolution between Russia and the Western world, and Russia's suddenly like revamps their production, but that can't happen that quickly either. So
I don't think that would stop it.
Or the whole world goes just into a shutdown. So they force everyone to stop using oil, which means the whole world will go into depression. So I mean, would a scenario like that ever play out? Yeah, I mean, but if you believe in that theory, I mean, does it even matter? Because if you're so confined to your, you know, what you can do and what you can't do, then does it even matter if your portfolio goes down because you can't do anything anyway? And it's such a small chance.
Right.
Like, I don't think it's even a chance that you would take into account when you're investing in commodities right now. It's just so unlikely.
Yeah, someone said that the commodity super cycle is wrong. What do you think about that? I would think that they didn't even do their homework. like what are they looking at?
If you look at the mining cycle, if you look at the money creation, if you look at the demand supply picture across the whole commodities complex, I don't know how you can say it's not in a super cycle, or at least just a secular.
What do you think about the M2 money supply, M2SL? Show everyone that. Yeah, M2SL.
Down a little bit.
Yeah. Because I mean, what's your opinions? What's your opinions there?
That is so negligible. You know, it's okay. So we're talking about 20. Sorry,
I don't think we've ever seen that in history, have we?
No. Well, according to the charts, we haven't.
And that goes all the way back to 1960.
Yes.
Because I've been watching this and I'm like, how is this going down? But your money velocity is kicking up at the same time. So do you think they created money that went into financial assets? They're taking that money out of the financial assets, and it's not really impacting the money that's flowing in the system because the velocity is kicking up. So they're
I don't know. I'll need to look into the data, but I don't think this is. I mean, right now, this isn't really anything significant if you look at it. I mean, this is pre-COVID. We've jacked it up to here. the fact that it's come down very slightly, for me, it doesn't mean much.
Mhm.
And I would just be more concentrating on where, the money, cash, the amount of cash sitting on the sidelines, for example. And this could just be the Fed, drawing down on their, doing their QT stuff,
Yes.
So
But
it's
but the way they measure inflation is through the consumer price index. So even though this is falling, they could be hitting financial assets, taking money out of financial assets. The financial assets drop, or the rates go up, however you want to say it. They're kind of unloading the balance sheet, but that doesn't impact the money in circulation necessarily. It may impact.
It doesn't.
It may impact the people's views on how they spend their money because it has a wealth effect or something like that. But yeah, I'm just trying to see if there's any bear cases because I am watching this. Are you doing all loans?
Yes. Where is it?
That's all commercial banks, real estate loans, residential real estate loans, revolving.
Real estate loans. Yeah, I mean, loans are flattening out, which is good. So yeah, I think it was TOTT. I forget now. I haven't looked at this stuff for a while. Total loans, commercial banks.
Yeah, it's total loans.
Although it doesn't show.
Let me see if I can find it.
Loans and leases in bank credit, all commercial.
There you go.
Yes, this is it. TOTL. No, it's still going up.
Oh, that is. That's where credit.
So
that's credit in the system, everyone. That is credit.
Credit expansion. And everyone talks about creation of a loan as a bad thing. So if you make credit card loans, they make it sound like it's a bad thing. Why are they taking credit card loans? But it's expansionary. It's additional money into the system created out of thin air because it's the banks lending, creating more money, and then releasing that money into the system, basically. So it is inflationary. So I don't get the argument where they say, oh, loans are created, it's bad because people are carrying on more debt. It's bad when there are delinquencies, right? It's bad when people can't pay back the loan and the money disappears through delinquencies, but it's not bad when it's been created. It's inflationary, it's expansionary while it's been created. So I think that's important to clarify.
Yeah, that's a positive thing for inflation to stay elevated.
Yes.
Yep. What else, Scott? What have we covered? We miss anything?
I don't think so. I think we've covered quite a lot today.
Yeah, if you guys have any questions, put it in the comment section below. I'd love to hear your guys' opinion on it. Even if you're a deflationary, in the deflationary camp, love to have your opinions and try to keep it clean. I'm an oil bull. I'm not a perma bull. I'm an oil bull when I need to be an oil bull. And right now, the way I see things lining up, I am more bullish than I've ever been. And in the short term, it could very well go down. I'm still going to be a bull. Price does not determine how bullish I am. It's the fundamentals and the value that all these companies have and what's about to come. I look in the future. I don't look at today. And we could go down a little bit more on this technical consolidation pullback that we're experiencing. I knew this was going to come at some point. Nobody knows when it's going to bottom. The exact, if it's 50% retracement or 61.8, somewhere along those lines. I'm going to stay long, and that's my strategy. I've used that strategy from the beginning. I bought 2020. I'm going to continue to hold it forward, and I'm going to buy on pullbacks, and hopefully that pays off massively. I want my want to have a 100 bagger in my life. That's on the bucket list. 100 bagger or more. So, anything else, Scott?
Yes. I think just one thing that I've just noticed on the oil chart, just very briefly. I mean, we could be looking at 200 monthly moving average as well. So if we do lose the 200 weekly moving average, I mean, if you look at the 2000s run, that's where it came to. We came down to here on this level. We tested a bunch of levels here, and we've grinded, just around the 200 monthly EMA. So that could be a key level to look out for. So if we were to come down, that's $63.61 right now. No, I mean, just expect it and just be ready to fire off when there are sales in the market. I mean, that's what I'm going to do. It's not financial advice, but
The way I've always seen this is we have a double bottom that's formed. The bottom in 2016 and then in 2020, we did a slingshot cheetah move higher from 2020, from the bottom of 2020, and then we're going to do a retest back to the top of that double bottom. So the top of the double bottom is basically where we are at right now. Now, it doesn't mean it can't go a little bit below it, but I think we're real close. Again, we'll see where it bottoms out, but I'm going to remain bullish. And once we clear, I'd say 120, 130 and hold above that, then it's really go time. So, yep. And I'm trying to think of anything that would change my opinion, though. I don't know if there's anything at this time. They'd have to release strategic petroleum reserves, and they just delay it out in the future.
Yeah, they can delay it out, but it's going to
just delay it.
Yes, but
which they delayed already.
Yes,
they've delayed it 6 months already.
It's going to make the bull run more epic.
Yep. All right, guys. Thanks for coming on, Scott. What channel did you have that you wanted people to go and check out? What's the name of it?
I might send you a link actually, Andy, because I don't think you can search for it. I've tried searching for it, but it's this channel here. But I'll send you the link. If you can maybe put it in the description as a link below, then that would be great.
Okay. I'll put a link in the below if you guys want to follow them. If you are, well, is this for all religions or is it mainly one?
It's not just for Christians. So it does have a bit of Christian content in there, but I talk about real life examples, what you can do practically to be happier. I think that's ultimately where we want to be, right? We want to live so that we can be happy and joyful.
Yep. It's good. Good. All right. Well, thanks for coming on, Scott. Really appreciate it. Definitely go check out his channel, guys. And thanks for reaching the end. I appreciate it. We'll catch everyone later.
Guys.
See ya.
See ya. Bye.